Hi, I'm Steve Spencer from SMB Capital. Today's trading lesson is on the idea of adapting to changing market volatility, changing market conditions. Back in January, when the market started to become weak, we saw a large range expansion in the amount of movement the market was moving intraday. Typically, we were seeing the SPYs, which is the ETF product that represents the S&P 500, moving 3 to 5 points intraday. And the way that we teach the equity traders on our desk is part of their training is to develop skills for order entry and being able to get in quickly and out quickly. When volatility picks up in the market, they have quite a strong edge because of these trading skills. And so as the market is moving so much intraday, they're momentum trading in, momentum trading out. They are taking profits quickly and then moving on to the next trade. And that's what we really saw for about a month or so, month plus. And things started to change a little bit in February, especially after we put in that double bottom down at 181. We very quickly moved higher. And then a lot of the movement we saw since that point in time actually happened in the overnight market, where we would gap up quite a bit overnight, and then intraday the ranges were tighter. And some of the traders really had trouble adjusting to the changing market conditions. And one of the things that we try to do every morning by holding a morning meeting is basically say, hey, look, here's what we're seeing today. And each day as we do our morning meeting, we can keep a strong beat on whether or not the conditions are changing. And one of the things you probably saw me tweet a couple of times in the last week or so is the ranges had really been starting to narrow intraday. So what does that do in terms of a short-term equity trader on the desk who is used to trading momentum, banging in, getting short, catching a quick point down, or banging in, getting long, catching a quick point up? There's less margin for error. So what we saw typically in January was you could bang in and bang out quickly, take a loss, 2, 3, 4 times even. But when you did catch that multi-point move, when the market really shot in one direction or the other, it wiped out all those losses and you made a lot of money. As that started to change, it was difficult, and especially for a trader that I spoke to today who's only been trading a couple of years and made quite a bit of money last month. And as the market started to change, he was kind of looking and saying, wow, we're really, these ranges we're moving quite a bit, but why am I having so much trouble? Am I struggling a little bit intraday? It's not the same. I'm struggling just to break even or make a little bit of money, or even taking large losses. And the one thing he hadn't been factoring in was a lot of these moves, a lot of the size of the moves were happening overnight. And so we saw that range, intraday coming down to $2, and even we saw a few days where we had a $1.50 range on the SPYs. And so one thing you want to do is every day, as the market, when you're reviewing your trading, is saying, hey, what's going on with the average range in the SPY? I was going 3 or 4 points a day for last week, and now I'm seeing only 2.5 points. And now this week I'm only seeing 2 points. When you track that very closely, you can see, okay, I need to change what I'm doing. To give you an example, what we saw recently today is after the big run up in the market over the last couple of weeks, we got back up to the January 7th high, and we were extended. We had moved from low to high over the last couple of days about almost $8, actually about $8 on the SPYs. And what we found this year in 2016 is when we've either gone up or down $8 in a very short amount of time is to fade in the other direction. So there was a nice trade from the pre-market starting above 197 to get short, but understand that if you looked at the market range intraday the rest of the day, it was only about $2. And so you had to really be focused on being short from the open and very selective on being shorting the rest of the day. If you got caught in every little move, it was very easy to lose a quick 20 cents here, a quick 20 cents there. But with the narrower ranges, we kind of want to pick our direction. Once we get that 1.5 or 2 points from low to high move, or vice versa, think about whether or not we're going to move in the opposite direction. And so very important as short-term traders, understanding what is the conditions right now, and if things are changing, to kind of change up your playbook a little bit, fine-tune it, tweak it a little bit, and just adapt to those conditions and take the setups that are working a little bit better.
Become a member of our trading community by joining SMBU Premium. Each month, as a community, we'll work together to improve our trading with a shared hour of learning. On our trading desk in New York City, the best traders continually grow. In fact, the best traders trade to grow. SMBU Premium is packed with 12 webinars, one a month, focused on market-specific trader training that will help you become a better trader by the end of the month. Invest in yourself. Invest in your trading. As I wrote in the playbook, tomorrow you can be better than you are today. SMBU Premium. How good can you be?